What's going on, traders? In this video, I'm going to be breaking down two USD Japanese yen trades that I took last week, one on the high time frames and one on the low time frames. You'll see how my flexible system allows me to trade both of these by first of all building one larger idea and then trading within it. Now, the first thing we want to do is build some context. So before we get into the individual trades, I'm going to show you how I build context around a market that actually allows me to find the trades within that. So we're looking at the daily time frame first of all. Now, this is a considerably higher time frame than any of the time frames that I took trades upon, but it's very important because what I want to do here is build a picture. Now, what we can see is we have these three almost equal highs. This forms a little bit of liquidity. And then above that, we have the 141 supply zone sitting up in here. And we also have, if we go down to the 4 hour, quite a clear supply at the 139 level as well. So this price action actually builds my initial idea because what I'm expecting is for price to push towards these levels. Now, why am I expecting that? Well, this comes down to the macroeconomics and the fundamentals. At the moment, the Federal Reserve is rather hawkish and the speculation around the Fed could potentially push to further interest rate increases due to the data that's been coming out, being very strong for labor markets and actually propping inflation up. What this means is that the Fed will either push interest rates higher or keep them where they are for longer, which actually increases the yield on the US dollar, attracts foreign investment, and is therefore bullish for the US dollar. Now, if we pair that with the Bank of Japan's monetary policy, which is incredibly flat and actually sits at negative interest rates and has done for a very long time, the Japanese yen is not putting up much of a fight against the US dollar in a time of strength like the current time. So the reason I'm expecting the dollar to buy against the yen is macro-based. And obviously, if we pair that with the technicals, with the liquidity and open imbalances, and also now this trend from this point, which has been forming higher highs and higher lows, we have a pretty solid picture to push price to the upside. So that's the context around the whole trade idea. And now I'm going to show you the two setups that I took within. So the first trade was actually a very, very low time frame trade, but it was all built in the larger picture. So now that we have the overall bias to buy USDJPY up, what we're doing is looking for a solid place to actually buy from. Now, we recently saw this demand zone just here get retested. And after the retest, we saw price push up and actually break structure at this level. So now we have the confirmation we need to buy, but we need to find an ideal place to actually buy from. Now, if we look at the range that has formed up here, we can see that we have, once again, three almost equal lows. Below that, we have imbalance. And if you spotted it already, congratulations, that's not the only imbalance. We also have some open space leading us down into this hourly demand zone at the bottom. So what I can do here is actually see confidently that the market is very likely to pull into this area. Now, why don't I think the market will stop at this demand zone here? Well, that is due to inducement. Basically, when we have a super clear zone in the market, a lot of the time, the market won't actually stop there and reverse, and instead will take out that level where the buyers have been attracted in to fill some deeper imbalance and trade into what we call an extreme zone, which is the demand or supply zone at the furthest end of the up or down move. In this case, it's a demand in a buy move. So with this picture built, I was very confident in taking price down at least to this level and most likely down to this level. Now, this actually set me up with a cool idea for a sell trade, and that came after the market swept out the highs of this range and traded into this 30-minute supply. So if we let the market play out a bit, you'll see that price came into the 30-minute supply zone and then reversed from there. And this is where the first trade was formulated. So as you can see, we came up into the zone, we pushed down, and we actually formed a demand fail at this small demand zone here. Now, a demand fail is basically where a demand zone fails to hold. And what this does is give us confidence that the market is likely to sell off because it shows the demand that's supposed to be propping price up is not very strong anymore. It basically indicates the demand in the market is drying up and the market is starting to be overtaken by sellers. Now, pair this with the fact that we've swept the highs of the range and traded into supply, and I had here quite a solid idea for a short. Now, if we go down to the 5-minute time frame here, we can see that we have this little imbalanced supply just here. And this was actually where I was initially looking to sell the market. Now, in the end, I never went through with the sell because of news risk. There was massive news risk about this position because we were expecting some inflationary data on the day. Now, you'll actually see that had I held this trade, it would have worked out very, very nicely, but my plan suggests it's not worth the news risk due to slippage. It can blow your account, and I always say it's better to miss out on one winning trade than it is to blow your account on one losing trade. Okay, so with the idea in mind to sell once the market got to this level, I could then actually start looking at the lower time frame structure and see if there was an opportunity for me to buy up to this level. And at this point, I went down to the 2-minute time frame, and I actually saw here on the 2-minute time frame, we had this little demand zone, which had been retested. Now, this was interesting to me because we'd seen here this equal low liquidity coming into the market. So what we'd actually seen with this push down was a sweep and trade into demand. Now, following on from that trade into demand, we had this high momentum up move, which broke the structure just here. And now we could really dial in on this low time frame structure, and this is where the first trade came from. So here on the 2-minute time frame, I saw at the bottom of the move we had this candle. This was the last candle before the impulse. So this is what I would like to use as my entry zone. And above that we had this small equal high liquidity, and we also had small imbalance just here into that supply zone that we were focusing on. So targeting this imbalanced demand for an entry, I decided to place an order at this level, and I had my stops just below the zone and my targets stretching up into there. Now what I actually did here was go to the 1 minute and refine the zone a little bit further. And I was more so interested in this little zone just here. Because we can see once again, imbalance, demand zone, that is what I love to see for my entries. So this was good because it allowed me to stretch out my risk reward, and I ended up getting around a 5.7 on this move because I had my stop just clear of this low here, and my entry was somewhere just around this level within that imbalance to account for spreads. So now let's take a look at how that trade played out. Now you can see the entry's been filled. And here you can see the completed move. As you can see, we built a very high time frame picture of what I expected the market to do, and then this trade was actually taken within the very low time frame charts for this pair. When you have that one overall thesis for a trade idea, it's then actually easier to find the smaller trades within. So that was trade number 1. And here is the live execution for that. Now you're going to see something quite interesting. As I mentioned a little bit earlier, I was initially planning on selling the market like this, trading it down towards that hourly zone. You'll actually see that that is exactly what happened, but due to the news risk, I didn't take it. So that would have been a nice bonus trade, but it's better to follow your plan and avoid getting destroyed by the news. So now this is going to lead us over to trade number 2. And trade number 2 was actually a high time frame trade, but it followed very much the same premise. Okay, so what we've got here is this imbalanced demand zone at the low. And this is the area that I was interested in buying from when I showed you that thesis beforehand. So what I did was simply place a buy limit on this level with stops beneath the zone, which gave me around a 30 pip stop. But this allowed me then to run the price all the way towards those higher time frame targets. Now the first target I wanted to start really taking profits off at was around 136.35, and then I actually did end up taking some partials at this level due to it being the weekend. So we've already covered the concept behind this trade. We had the trade into demand zone, we had the break of structure, now we're looking for this inducement zone to be taken out and priced to trade into this real zone down here for a tap in and then a run to the upside. So now let's see how that went. As you can see, the trade has been tapped in and is now moving profitably. And what we've had for a little bit of extra confidence now is a break of this structure. So this definitely opens the doors to at least taking price towards this level. And because we already filled the supply and this is actually a higher low, we can safely anticipate the market is going to go and push above that high and trade us towards that target we have around 136.350. And as you can see, as of the time of filming this video, we are pretty much sitting at that level, having achieved at the maximum around 8R. Now I was taking partials along the way, and I've been looking for a re-entry to be made later in the week if the US dollar can pull back. So I'm looking to enter from around this area, potentially this area down here at 134 on a significant deep pullback. And just for reference, here is the live executions for that position as well. So there we have it, 2 solid trades taken on USDJPY last week, following the same exact system and using that overall context to identify good trade areas. Every trade that I take is based around supply and demand, liquidity, trend structure, and market efficiency. And just these things alone, when you can understand the markets properly and also look at them through a fundamental light, can build you a really solid trading system that will bring you consistent results. Now, if you want to learn that system, head over to the links in the description. There's a free training you can check out. There's also a link to my trading academy if you want to learn directly from me, trade live with me every day, and personally learn everything around the fundamental and technical systems that I use to place my trades. So that's all for today, guys. I hope you've enjoyed the video. If you have, please do drop a like and make sure you subscribe so you don't miss any of the future videos. I do post these educational videos twice a week. So thank you for watching. I hope you did enjoy it, and I look forward to seeing you in the next video. See you later.